By popular demand, I decided to do a video to discuss my 2023 year-to-date return, share my best and worst performing stocks of 2023 and explain my strategy and the things that I did in general. Now, I made this video in the end of 2022 discussing my year-to-date performance and everything, and I talked to you about how I made 27% in 2022. I shared time-stamped trades that I have in my own Discord, in my own investment group, and I shared pretty much many other stocks that are uncorrelated to the S&P, GO, Crocs, Charter, and many others that we had success in 2022. So I think the 2023 video is going to be very helpful to a lot of you. I think you guys are going to enjoy it. It's going to help add some transparency to the things that I did in 2023. And I'm going to share those three stocks with you. I still own them till today. One of them is going to surprise a lot of you. You will be very surprised that someone like me, which is more of a value investor, owns this very high growth, unprofitable company. I know it's a longer video than usual, but I only do this once a year, so I hope you support me and you watch the whole video. And you do look at these stocks, because some of them, yes, they are up, but I still believe they are good buying opportunities at these prices. I'm going to give you all of that in the video. I think you're really going to enjoy it. Now, the first thing that I did, which was pretty much the worst performing thing I did in 2023, it was not mainly with stocks, it was with options. I mean, 2023 has been a very easy year. You had to try very hard to lose money this year, unless maybe you were exposed to a lot of the Chinese stocks, or maybe it's a certain oil stocks, maybe you lost a little bit of money. But it's been an easy year so far. Everyone pretty much made money. Everyone feels like a genius. Everyone made 20, 30, 40, 50% with mega cap stocks, which 90% of retail investors own. So it's been a very easy year. And it's very important for us not to get our ego up too high and have very high expectations, because we could most likely have a down year or a flat year in 2024. But for 2023, I entered the year very bearish from 2022. Maybe some of you will follow me in 2022. You saw my videos that I've been a little bit bearish on the market for obvious reasons, and I was mainly hedging my portfolio with 20% out of the money put options. So every time we used to touch the trend line, I used to buy put options for protection, and then we go down, I sell these put options, they would go up 20, 30, 50, some of them 100, 150%. I would use the profits to offset some of the losses. I would buy the dip on a lot of the stocks, then we go up again, we touch the trend line, I short again, I do the same thing, and I shorted a third time. But then I shorted a fourth time at the end of January, when I was still very bearish on the market, but this time we broke out of this pattern and we made a higher high, and this is when I lost around 27 or 28% on these put options. They were 3% of my portfolio, and once we made a higher high, I noticed a change in sentiment, a change in trend. I noticed investors were very bullish, and I saw maybe the market has bottomed as we made the new high. So I just decided to exit all my put positions at a 28% loss and just hold some cash and move on a little bit. Then I bought the SVB dip. But this has been my biggest loss, 27 to 28%. And then I went on YouTube in many videos. I said I was wrong about the 2022 market crash. I thought we would go lower. We did not go lower. I thought we would go to like 3,300, 3,400. We didn't go there. But you still have a lot of YouTubers still today, which I'm not going to mention, and they still double down on the bearish thesis. They are afraid to admit that they were wrong. They will say, oh, but I was wrong on the timing. But it's the same thing. If you're trying to buy put options or short the S&P or do any macro videos, you have to be right on the timing. And if you're wrong on the timings, then you're just wrong in general. Even though you end up being right 3 or 5 years from now, if you're wrong on the timing, you're wrong. And I was one of the first and the few to admit I was wrong, and I moved on from it. I don't have any stocks that are down a crazy amount. One of them is down like 1.8%. It's nothing too crazy, but this has been my biggest loss, down 28% on 3% of my portfolio in S&P 500 put options in January. Now, my best performer for 2023 has not been a mega cap stock. It has not been Nvidia. It has not been a Palantir or any AI kind of stock. It's more of my style, small, unknown, under the radar, boring, which a lot of you talk about my stocks being boring, and yet these stocks keep going up and they perform amazingly well. This is mainly in my circle of competence, and this is a company called Mama's Creations. I talked about it only once on YouTube, on a video that did not get a lot of views, and back then it was still much cheaper than now. It was like $350 or $360, and I explained my micro cap investment strategy on YouTube, which people, they don't like that stuff. They prefer the market crash videos over education educational videos like my, microcap thesis, which you could watch it here if you're interested. But in terms of Mama's Creations, my cost basis is $1.74 per share. I am up 180% on this company, now sitting at $4.87 per share, one of the best performers that I had in a very long time. Now, before I get into the introduction of the company and tell you what it is, if you're interested in investing in this company, it's a must watch to watch this interview with the CEO on this YouTube channel. It's called Planet Microcap. This is a guy who's a very smart person. He does a lot of interview with different CEOs and different kind of things, and it's pretty good place to find ideas and find a few things. I had never found an idea over there, but I do like to watch the CEO interviews. And he recently interviewed the CEO, and if you watch the interview, I mean, it's an amazing interview, but if you do watch it, you will find out that even though the stock is up so much, it's only getting started. There's so much potential in this company if the CEO does deliver. Amazing interview. I highly recommend it. But Mama Mancini's or Mama's Creations, they do manufacture and they have a lot of, pretty boring stuff, as I said. Meatballs, meat, salad, chicken, pasta, olives, sandwiches. They're trying to get into soup, pizzas, and sushi, and many other, kind of areas within the food industry, deli, kind of, ready prepared kind of meals. A lot of people enjoy that stuff. There has been a trend that has begun, I believe, in 2021. And this is mainly people not really going out too much and preferring to eat something very healthy, very, clean at home, something they prepare. You might have seen a lot of videos on Instagram and TikTok of women and many other people, guys even, they're just, cooking something at home and then having their friends over, and they're proud that they cook something for their friends. And it's mostly something like the Mama Mancini's meatballs, ready to prepare. It's very easy to cook. So this has been a trend that's been emerging, especially as we had higher inflation. A lot of people realize that they can save some money because they don't have to tip if they're buying something like the Mama Mancini's meatballs. They don't have to spend gas money to go back and forth to the restaurant and wait an hour or two in line or make reservations and do all these things. They don't have to do that stuff. They're going to shop for groceries. They can buy one of the salads or one of the chicken. They can have their friends over, cook it in 15, 20 minutes, even sometimes 10 minutes. And it's pretty cheap for like $13 or $14. It could feed 3 or 4 people. So this has been an amazing trend, and it has continued to grow even this quarter in 2023 after inflation has came down a bit. The CEO has only been here for 10 months, and his focus is margin, and then margin. He took gross margins from 11.9% to 30.1%. Massive expansion, because the previous managers, they were absolutely stupid. I mean, let's say they want to take a delivery to something like Costco, and they're delivering chicken and meatballs and a salad. They have 3 different trucks: a truck for chicken, a truck for meatballs, and a truck for salad. And the CEO came in, I'm like, what's going on? That's dumb. So he just puts them all in one truck, one delivery. He saved so much on shipping and logistics, manufacturing, labeling. He increased the prices on many of the products that haven't been increased in a very long time. And he took gross margins from pretty close to 12% to around 30% in just 10 months. Astonishing, amazing CEO. He came from Mondelez. And I highly encourage you again to watch this interview with the CEO. You're gonna learn and you're gonna find a lot of interesting things about this company, which is still growing as of the recent quarter, both revenues and net income. They were up 15% sequentially from the second quarter of fiscal 2024. So this is 15% quarter on quarter from the previous quarter. A very high growth for a boring company that most of you comment under my videos every time I talk about a company. Say, oh, that's boring. That's not exciting. That's not AI. But this is what I like. I mean, and I like these stocks because they don't have much change. If you're investing in AI, you have to be right on a lot of competition. You have to be right on the changes at the same exact time. It's a lot of different things. So I'd rather invest in boring companies. This is what I specialize in. I don't need to claim to be an AI expert. A lot of people claim to be certain experts so they can get views on certain things. I don't claim to be an expert on banking or AI. I invest in things I understand and I'm comfortable in. And one of them is the food industry and retailers and pretty boring stuff. So Mama Mancini's has been growing fast. It's sitting at 25 times earnings, which might seem very expensive. And it has been expensive for a while. And there's so many people I know, they sold out of the stock way before the 180% just because the stock got overvalued. And this is something I learned the hard way, to not sell a stock that's overvalued if the company is keep growing, because the company is eventually going to grow into the valuation in terms of the stock. If they can keep growing 15% net income every single quarter or even 5%, it's eventually going to catch up to the valuation. So I'm not selling the stock just because it's overvalued, even though I believe 25 times earnings is unsustainable for a food company like Mama's Creations. In terms of the vision of the CEO and the plan and the long-term potential that I see, the CEO's plan is to become a billion-dollar company in sales by 2030. In sales, which is very important. I'm going to tell you why. $1 billion in sales. Now, many of you will tell me you should not trust the CEO. But if you do watch the interview, and you look at everything that the CEO did, you would have to trust the CEO because he has over-delivered. He's been amazing. He came from Mondelez, amazing background, and just an amazing person in general. I mean, the CEO is one of the reasons why I am in this company. As a 2030 vision is to become $1 billion in sales. Their current net income margins are somewhere around 6 to 7%. The CEO believes in 10% net income margin over the long term, and I think this is highly achievable for a food company. Most of them have 10 to 15% net income margins. So using the $1 billion in sales, 10% net income margin, this is $100 million in net income by 2030. Putting a 15 times earnings multiple, which is cheap for this company if it keeps growing at this pace, but if it doesn't, 15 times earnings for a food company is fair. So 15 times earnings on $100 million, this is $1.5 billion market cap. The current market cap is $170 million. So this would be something pretty close to a 9x over the next 6 or 7 years. I mean, this is a ridiculously high return, even though the stock is up so much. And most of us, we just can't buy these stocks. I mean, I bought the stock at 52-week high. The stock was already up 70%. But I saw the potential. I did not let the performance blind me. And I just looked at the company, I analyzed it, and I bought it. And I haven't sold it because it went up or it went down. I haven't sold it because the CEO continued to deliver. Value is growing. The net income are growing. Everything is growing. So I believe the company has pretty close to a 9x over the next 6 or 7 years if everything goes right. But even if the CEO is 50% wrong, they don't reach $1 billion, they reach $500 million. This is like a 3 to 4x in the next 6 or 7 years, which is still a very high return. So it's very hard for me to lose money from here if the CEO does deliver. And if he stays alive. I mean, I think he will. But he really changed the company. He changed the culture. He got the right people in place, changed the management, changed the board. He changed everything. Amazing CEO. I mean, everything is amazing with this company. I'm holding it for the very long term. If you're interested in investing in it, you have to do your own research. You have to be comfortable with volatility because a lot of the micro caps, they are very volatile. They can go up and down 10% in one day with no reasons. And a lot of you just cannot handle volatility. You're not wired to handle volatility. And this is normal. A lot of you like index funds. They're not too volatile. They go up and down 1 to 2%. This is fine. But if you want to invest in microcaps or in this company, you have to have a lot of conviction, a lot of research. You have to know what you're doing. If the stock goes up 20, 30%, you don't have to get carried away with what the market is telling you. You have to believe in your own thesis. And this is why I have my own investment group. I share my thesis, updates. People ask me questions all the time. Every time the stock goes down 10%, I say, hey, why did it go down 10%? Well, there's no reason. This is a microcap. It goes up and down 10%. And I have 4 more of those microcaps that I believe have multi-bagger potential over the next few years. And I'm holding them all for the long term. So this was my best performer. The second best performer for me in 2023 has been a company I talked about on YouTube. And this is a GO Group. My cost basis is $7.09 per share. I am up 57% on year-to-date 2023 on my investment in GO. This is a company I talked about on YouTube. And 7 months ago, it was 2 undervalued stocks to consider in May with the Michael Burry thumbnail. I said I see over a 3x on this stock. It was at $7.14 or 16 cents. And it's been performing amazingly well since then. But I personally believe GO is getting to fair value, so I might sell it very, very soon. I'm being very honest. I think there's better opportunities elsewhere, but I don't have them right now. If I do find a better opportunity, I'm going to sell GO and move on. I still believe the company can get to $24, $25 3 to 5 years from now, but I'm sitting at 57% gain. So I might consider taking a profit and moving to something else. So this has been the second best investment. I talked about it on YouTube. One investment, which is kind of the third best investment, but then I'm gonna talk about the growth company, which a lot of you are gonna be surprised that I own a growth company that's unprofitable in my portfolio. But first, I have to talk about this stock because I don't own it anymore, but I did make a lot of money on it. And this is a company called CSV Carriage Services. I talked about it 2 times on YouTube. The first one, it went up 31.5%, and this is when it got acquired. I mean, they got the proposal to get acquired from a Canadian company called Park Lawn. It went up 31% on this news. I sold on the same exact day. After that, the acquisition kind of fell through. They don't want to continue in the acquisition anymore. So then it fell to around $19 or $20 per share. Then I talked about it in this video just in November. 2 undervalued stocks to consider in November, and since then the stock is up around 18% from this video. Now, the main reason I want to talk about this is because I want to clarify something to a lot of you that comment under my videos, because I always get the same exact comments on every single stock that I do pretty much. And this is that it says pretty much that the stock is junk, free cash flow per share is decreasing, it has very high debt, this is a very bad investment, it's very risky, it's about to explode, it's trash, it's not going to perform well, and all these things, low return on capital, very high debt, and declining metrics, and just bad stuff in general. Yet, every time I talk about these stocks, they go up 50%, 20%, 30%, Charter Communications, Crocs, many other ones. You tell me they're value traps, you tell me they're junk, and then they perform so well. And it's the same thing with Sandstorm, which is a stock that I talked about like 3 weeks ago. And the main reason they look so bad is because they are junk. You're right, they are junk. But if you pay the right price for the junk, you can still make money. And this is the whole thing with picking cigar butts, picking bad investments like I do. Most people on YouTube, they are buy and hold forever investors. They invest in Amazon, Google, Apple, Nvidia, all the stocks that everyone talks about. And with these stocks, you have to look at the quality of the company. If the company is high quality, increasing free cash flow per share, high return on capital, but you're paying a premium for it. Now, what I do most of the time is I buy the stocks that you don't want to buy. I buy the stocks that you get scared of. This is the stocks that I buy. And this is the stocks that allowed me to make 27% in 2022 because I'm buying stocks that give an uncorrelated return to the S&P 500. So whenever you look at the company, you look at the high debt, you look at the low return on capital, you look at all this stuff, you say, oh, it's junk, and you skip it. Well, this is why the opportunity exists because of you. Because you are skipping it, you are not digging deep enough, and you're not asking yourself, am I paying a cheap enough price for all this junk? And the answer with CSV was yes. The answer with GO was yes. And I believe the answer with Sandstorm, which looks trash, and I got a lot of comments on it, I think it's also going to perform amazingly well in 2024. Hopefully I'm right. We're going to look back into 2024 and see if Sandstorm Gold performs well. But this is another one. Now, in terms of my third best performer in 2023, and most of you are going to be very surprised that I own this company. And this is a company called Hims and Hers Health, ticker symbol HIMS. My cost basis is $6.87. I'm up 26.4% on this investment. I bought it recently. Then I was down like 20%. I added 100%. I doubled my position on Hims and Hers Health. And since then, I'm up 26%. I'm up a little bit more. I think it's around 28% right now. But on when I did the video, which was yesterday pretty much, I put all the charts and everything, it was 26% on Hims and Hers Health. This is a stock I talked about on YouTube. I said 2 high growth stocks to consider, and I said why Hims is a much better value proposition than Palantir, even though they're so different, but they're both growth stocks, and Hims has much higher growth, or the same growth as Palantir, and very good margins, but a much lower price. So this is why I liked Hims then, and it's up like 30% since I made this video. It performed very, very well. Hims and Hers Health, they have 1.4 million subscribers, which grew 56% in Q3 of 2023 in terms of revenue growth. They also grew 57%, very high growth. Now, in terms of Hims and Hers Health, it's pretty close to a telehealth kind of company. You can talk to some kind of dermatologist on the internet or whatever problems you have that Hims and Hers Health offer. You could talk with someone, with a specialist or a doctor on the internet. They send you a prescription to your own house. You don't even have to go pick it up. And you could just get everything online. This is good for a lot of people in rural areas or in areas where you just don't have a lot of doctors and they're all booked all the time. Or for a lot of younger people which prefer to talk with someone or chat with someone on the internet internet rather than go to the doctor and talk about their mental health problems and everything. And this is critical. And this is why Hims and Hers Health has resonated a lot with younger people. They have a lot of things in man and women's health. They have a lot of things around hair loss, acne, aging, and anxiety, depression, which has been growing amazingly well in the United States. And it's sad, but this is something that Hims is trying to fix. Depression is a very big problem, right now. As they got just in December in weight loss, weight management, which is pretty amazing. And you saw what's happening with Ozempic and all the kind of trend around weight loss. Well, Hims and Hers Health has entered this market with a so far successful kind of prescription model and all these kind of things. They're trying to get into pain management, fertility, diabetes, and PSD, insomnia, and many other things. Now, the best part about Hims is they have 1.4 million customers locked in on a 90% subscription-based revenue business model, 90% amazing kind of recurring revenue business model. Now, the best part about it is they can cross-sell a lot of these products. So if someone has a hair loss problem, maybe they have a depression problem, and Hims and Hers Health can, kind of cross-sell these kind of services, or maybe they have an acne problem, or an anxiety problem, or a weight loss problem right now, which I believe weight loss is going to be huge for them in 2024. So if they spend some money on advertising, they can cross-sell a lot of these services to their already existing customers and save money on advertising. Now, the company is growing rapidly. They grew 93% in 2022, 65% in 2023, expected to grow 26 and 21% 2024, 2025. The growth is expected to slow down. I think this is normal because the company is getting larger and larger, even though the TAM is very high. But I believe the CEO, he's trying to slow down the increase in advertisement spending so they can be somewhat profitable and not issue stock. They have an amazing balance sheet, but the company is currently unprofitable. It's expected to make their first profit in Q4 of 2023. If it's not in Q4, it might be in Q1 of 2024. So from a loss of 31 cents to a gain of 18 cents and up to 63 cents by 2027. This is, of course, EPS normalized. It's not GAAP metrics. If you look at GAAP metrics, the company is not going to be profitable before 2025. So this is very risky stuff. And but a lot of Wall Street stuff, and everyone now is using EPS normalized. So this is what I'm using to value Hims. EPS normalized. They do have stock-based compensation. It's not too crazy. It's been, stabilizing a little bit. It's starting to go down, kind of like Palantir. So I like Hims and Hers Health over here. The company, they have over an 83% gross margins, very high margins. They spent $116 million last quarter on marketing. Now they lost around $7.4 million. So if Hims decided to spend, instead of $116 million, maybe $105 million, Hims would have been profitable on net income per share or net income basis. So Hims can be profitable whenever they want, but they are investing for growth, investing in their name, in their brand, in themselves, in growing revenues, in getting more known, well-known, more customers, more referral, more people. And this is what Hims should be doing. I would not want Hims to be focused on profitability right now. I'm willing to take a loss. I'm willing to take some share dilution. If the value is being created for the long term, if Hims is growing, and the CEO and the management, if you listen to the earnings call, they seem very smart. They are focused on the long term, not the short term. And this is what I want with a small cap, speculative investment like Hims and Hers Health. This is not a large percentage of my portfolio, but it's a small one. And if I'm right on Hims and it goes up 5 or 6 times, then I'm going to make a lot of money. But if I'm wrong, then I'm not going to lose much, especially as I'm already up 26%. I have some gains to play with this company and see how they perform, but they have always exceeded my expectations, and I'm in it for the long term. Now, before I get into my year-to-date return, I know some idiots in the comments, they want to sound smart. They're going to say that I'm a fraud, that I'm lying to you, that I'm making all this up, and I'm inventing everything and all these things, and it sounds very smart, right? But you have to remember, I have over 220 members in my own Patreon, in my own investment group. I share everything I do with them live. They buy the stocks, a lot of them when I buy them, they sell them when I sell them. A lot of them, as you could see here, this is someone who's just thanking me that he was in the group, and he has been here since 2022, and he got the returns that I pretty much got, and there's countless of them. And this is not a fraud, because let's say I was inventing something on YouTube to sound smart, and if they know about it, they're gonna leave, they're gonna comment about me, they're gonna ruin my reputation, and I don't want to ruin up my reputation, so I'm not lying to you here on YouTube. I don't have to lie to you, I'm just saying the truth. And if you really want to find out the truth and you're so curious about me, I mean, you could join join my own group. You could ask anyone that's been there for a year or two, say, hey, you've been here for 2 years. Is this guy a fraud? Did he lie to you? Did he say something he didn't do? And you could just find out, But in terms of my year-to-date return, the S&P 500 was up around 24% so far, 25%. Nasdaq is up a shocking 55%, and my portfolio is only up around pretty close right now to 29% year to date. Now you might say, you did all this work, you picked all these stocks and all these things, only to outperform the S&P by 4%. Well, yes, it's been disappointing. I expected something much better, maybe something closer to the Nasdaq, but I did not have the exposure to the Magnificent Seven, which have pretty much crushed everything in 2023, and I don't think it's going to be like that forever. And the best part about my own strategy is if you look at the best performers, again, in 2023, Microsoft up 56%, Apple 48%, Nvidia 237%, Amazon 82%, Tesla 100%. Now, if you believe these companies are going to perform the same exact thing in 2024, if you believe Amazon is going to be up 82% again in 2024, I think you'd be extremely delusional in my opinion. So a lot of the gains have been made in 2023 with the mega caps. Maybe over the next 1 to 2 years, they can be flat or down. For them to grow into the valuation, into the multiple expansion, I would not be surprised. Or maybe they could return 10 to 15%. But my returns are not correlated to the mega caps. They are not correlated to the S&P. If the S&P is down, I could still be up 20%. But if the S&P is up, I could still be down 20%. So most of my stocks are small and micro caps, and they are highly dependent on my own stock picking skills. I don't have the market to save me. I don't have inflows in the S&Ps that's going to carry Microsoft up and make me look like a genius to save me. I don't have this stuff. I depend on my own thesis, on my own kind of investment skills and the stocks that I pick. And this is why if next year the S&P is flat, I could be up 25%, just like I was up 27% when the S&P was down like 30% or 24% in 2022. So this is why I have a lot of people in my own group. They are index fund investors, a lot of mega cap and large cap investors, is because they are already correlated to the S&P. They want something that's not correlated to the S&P, something small in micro caps. So they have a small percentage of my portfolio invested in the stocks that I share in my own group, that they don't have the same correlation to the S&P. They could perform well if the S&P is not performing well, if I pick the right stocks, of course. And they just have massive upside potential in stocks with high insider ownership, picked by me and that I own in my personal portfolio. So if this is something you're looking for, if something you're interested in, you could check out the link in the description and maybe join me in January 1st of 2024. I would love to see you there. If you're not going to join me, that's fine. Thank you so much for watching my videos and supporting me on YouTube in 2023. It meant a lot to me. Thank you very much. I hope you're going to keep watching me in 2024. I hope you have a blessed and amazing, successful 2024 year in the market and with your family and your life in general. I wish you the best, and I'll see you again in 2024.